Ladies and gentlemen, welcome back to the channel and the week of the Santa Claus rally. Okay, or at least the start of a Santa Claus rally, and Tesla definitely feeling the rally. Tesla stock hitting a new intraday high today at $498.82. The stock fell a little bit, down to about $492.45 per share. And here in today's episode, we're going to go over all of your breaking news specifically for Tesla. We're also going to go over your broader market news today. What's happening? Why is Tesla breaking out? And what's to come? I think this is a pretty good sign of the larger rally that I've been alluding to on this channel for a while now. It's starting. Get with it or get left behind, basically. I'm not a financial advisor. I'm not a financial planner. Obviously, come to your own conclusions, do your own due diligence, and only invest what you can afford to risk when all things are said and done. But I think the future is bright for Tesla in the short term and over the next 12, 24, 36 months. So we have a lot to get into in today's episode. Hit that like button as well as subscribe to the channel if you guys have not done so already. And let's begin. Oh, and if you guys want to come trade and invest alongside us, check that link out down below in the description of today's episode to come join the trading community. In the news today, Neoen Australia says it has begun construction of a new $220 million big battery project, which will also be the first project in the world to deploy Tesla's new Mega Block product, its next generation grid scale battery tech. Mega Block combines 4 Megapack 3 units into a single deployable block, offering 20 megawatt-hour units, each with an integrated transformer and switchgear. Tesla says this will translate into faster installations and lower cost for grid-level storage, up to 40% cheaper. Megapack 3 production will begin at Tesla's upcoming Mega Factory in Houston, Texas in 2026 with up to 50 gigawatt hours per year of manufacturing capacity. Tesla has secured a new $275 million Megapack order from Matrix Renewables for a 500 megawatt, 1 gigawatt hour standalone battery energy storage system in Eccles, Scotland. They say, quote, "We are excited to support Matrix Renewables with their entry into the UK, bringing Tesla's track record in the market together with Matrix Renewables' expertise and vision. We highly value the partnership with their team and look forward to executing this landmark project together," said Mike Snyder, Energy Vice President at Tesla. And also in the news today, Tesla's FSD Supervised could launch in the United Arab Emirates next month. This comes after Elon Musk met with effectively a high government official over there, and they did some test driving with FSD in the country. You could see Elon and that individual imaged here. That actually happened yesterday, so yeah, you're getting close. Ford CFO says, quote, "I'd expect there to be a contraction in the US EV market, particularly our sales, and us to lean more into some of the products that enable us to put, for instance, in our Mustangs, maybe a 5.0 liter engine instead of the 2.3 liter engine." Gary Black says Tesla kicked Waymo's ass this weekend in San Francisco, which is kind of unusual because Gary Black recently doesn't have much to say that's positive around Tesla. So, even some of the more Tesla bears, Tesla, not bulls, are pointing out that, Tesla, you got to give them their flowers sometimes. Now, in option activity for Tesla stock today from hedge funds and institutions, you have 133 different trades totaling $108 million with a positive order value of 57%. So it is more positive than negative, but pretty close to being neutral overall. If you take a look at what the short sellers are doing today, it looks like they're covering about 138,000 shares in Tesla. Short interest still sitting at about 3.3%, about 78 million shares sold short. And, 500 is a very big battleground level Okay, if you can get above 500, that's where a lot of pressure starts to get put on the shorts, right? That's where a lot of the traders step in. A lot of people right here, might be excited about Tesla, especially long-term investors. We see the vision, we see where Tesla is going next year, but for the traders out there, breaking above 500 is when it makes a lot of sense to trade that new all-time high, right? $490, $495, 98, blah, blah, blah. Those are new all-time highs, but getting above 500 is a level in which you've never seen before, okay? That's where, an extended rally above 500 becomes a lot more likely, right? And I think that's where a lot of traders step in, and it's going to be a battleground area for some time. But again, I will point out the obvious here. We don't have any big Tesla news today. It's more of the seasonals. It's more of the, people starting to price in what next year could look like. And that is the main contributor to Tesla stock and even the broader markets today. We're going to get into it in just a moment. But, risk assets, the areas that have not done as well in the last couple of months are the outperforming areas today. And, we haven't even technically started the Santa Claus rally, but maybe there's some optimism out there around the Santa Claus rally. Now, in your indexes today, the Dow is up 0.52%, S&P up 0.58%, NASDAQ up 0.55%. But look at the big winner today. The Russell 2000 is up 1.5%. So, it's outperforming other indexes by 3x today. There is definitely a shift towards risk assets, some of the areas that perhaps have not performed so great in the last couple of months. Now, the VIX is down about 3% today as well, getting back to some of the lower levels of about 14.5. So people are really settling in here, getting comfortable with a Santa Claus rally and what should be a really good 2026. If you're looking at your portfolio like, hey, where should I position in right now for 2026? The tech trade, the hyper growth trade, the AI trade looks to be supported a lot with the setup that we have for next year, and I think you're just seeing part of that right now. Now, again, technically the Santa Claus rally does not begin until Christmas Eve. Okay, Wednesday is the start of the Santa Claus rally. That heads into Friday, and then Monday of next week, Tuesday of next week, Wednesday, Thursday, and Friday. Okay, that is the Santa Claus rally period. Technically, the last 5 trading days of December and the first 2 trading days of the new year. And I think we're getting a little taste of what the Santa Claus rally is going to look like. Now, 10-year Treasury yields are actually up about 1.5 basis points today to 4.16%. Oil is up over 2% today. Gold is up about 2% today. Cryptos are up a little bit, but Bitcoin is still sitting at a very suppressed level. Inevitably, we should see Bitcoin start to move higher again. I mean, you're still down in the dumps. If Bitcoin can catch a bid and start to work back into the 90,000s, hopefully closer to 100,000, you should see this market continue to do well. The risk, on trade continue to thrive into the start of 2026. I don't think we're just going to have a Santa Claus rally here and then January is going to suck. I think Wall Street is very underweight this market. They've been net sellers of stocks in 2025. They're literally underweight this market into what looks like we're going to have a good economy next year with multiple Fed rate cuts, a new bullish Fed chair, lower inflation, real estate that picks up, consumer balance sheets, and households that get stronger. This is not a market you want to be underweight stocks in my opinion. Now, there's going to be some issues next year, of course, but at this stage, you'd be basically trying to predict a gray swan or black swan event or something crazy to happen. And I wouldn't want to bet the whole portfolio on that. Now, one stock that continues to be a driving force for the risk on trade is Oracle. Oracle is up another 2.5% today, really just coming off of strength from the TikTok deal. It was announced that Oracle is going to be one of the partners for TikTok, the USA division. And Oracle has had so much bad news recently. There's been so much concern and worry over Oracle's debt and balance sheet and sustainability of their push into AI, that it's been a big drag on this market. And if, Oracle can continue to work higher, as you see today, it is something that is going to continue to help the small caps, help the AI areas. The AI stocks are doing the best today. And Oracle is a big reason for that. Also, something else that likely helps at this point is we don't really have any earnings for the next 2 weeks. So there's not much in terms of catalyst, economically speaking, over the next 2 weeks. There's not a lot as far as earnings for the next 2 weeks. So there's not a lot to react to. And when you have what looks to be a really good setup for next year, you have the Santa Claus rally, you have underpositioning in this market, you have window dressing by hedge funds and institutions. That's basically just to boost returns into the end of the year so you report better numbers for your clients, right? That's what window dressing is. When you have all these factors coming together and then you don't have any real earnings or any big economic, catalyst, you tend to get a melt up in markets. And at this point, that's how I would categorize this, as a melt up, but with a re-rating of AI. Oracle has really killed AI stocks, and they were getting too underrated, if we can use these terminologies. And I think you're seeing a re-rating of that, but also a broader market just melt up today. If we take a look at the heat map and what that is showing us here, go ahead and refresh this. You're looking at green almost across the board. Apple down a little bit, down about 0.5%. Microsoft about break even. Broadcom about break even. But banks, semiconductors, technology broadly, software having a really good day. Insurance, medical devices, industrials, home improvement. All of these areas having a really good day. Okay. Consumer defensives, Walmart trading down a little bit. Costco down a little bit. Dollar Tree down a little bit. This is broadly a very strong market today. And I think it continues into the Santa Claus rally. I think after all, we might not get coal in our stockings this year. Now, in the news today, the U.S. ambassador is summoned by Denmark over Trump's Greenland push. So, we'll see what happens there. Now, Trump's 4:30 p.m. announcement today is on shipbuilding. So, a push to have more shipbuilding in this country. And also in the news today, President Trump could name a new Fed chair by the first week of January. U.S. November retail sales report has been rescheduled for January 14th. The September through October new home sales reports also rescheduled for January 13th. And September through October housing starts is rescheduled for January 9th. DHS is offering $3,000 to illegal aliens to self-deport. The Department of Homeland Security, led by Secretary Kristi Noem, has increased its self-deportation incentive to a $3,000 stipend plus fee airfare home for undocumented immigrants who voluntarily deport by December 31st, 2025. Eligible individuals can register via the CBP Home app. Participants also receive waivers for certain civil fines related to unlawful presence. Noem urged immigrants to accept the limited time offer, noting it preserves the possibility of legal return in the future. And in a report today, China likely loaded over 100 ICBMs, intercontinental ballistic missiles, across 3 silo fields, according to a draft Pentagon report. We'll see if Trump has anything to say about that. We'll see if it's becomes a larger press issue. But at this point, we're not hearing any comments. Nvidia shares up 1.2% today after a report It says the company aims to begin H200 chip shipments to China by mid-February. According to UBS, they say here, quote, why the 2025 stock market rally can continue in 2026. UBS sees the U.S. stock market's 2025 rally extending into 2026, driven by strong earnings, easier monetary policy, and policy clarity. Corporate profits, especially in tech, remain robust, keeping valuations moderate. The bank forecasts S&P 500 earnings to rise 10%, potentially lifting the index to around 7,700. Additional Federal Reserve rate cuts and new Fed chair may support further gains. Upcoming clarity on tariffs could reduce uncertainty. UBS maintains an attractive rating on U.S. equities, advising investors to stay positioned for continued market growth. And I guess in good news today, Russia says it will not attack the EU or NATO. Now, Fed Moran says today that he has not decided yet if he will vote for a 25 or 50 basis point cut. Fed Moran says you have to give Powell credit for wrangling 3 rate cuts out of the FOMC. And Fed Moran says something that I've talked about for a while now on this channel, that tax refunds next year will provide a bit of stimulus. Fed Moran says if we don't adjust policy down, we do face a rising risk of a recession, but he says that he does not see a recession in the near term. He says people not updating views reflects poorly on the institution, and Fed Moran says recent data should push people into a dovish direction. Fed Moran says in the last few months, we've had data in accord with my view of the world. He says that shelter CPI was somewhat distorted by the shutdown, and says there were some anomalies in last week's inflation data from the government shutdown. But, from what we've heard so far, even if you factor in shelter inflation, you were still significantly lower than everyone was expecting for CPI. So even if you put in a shelter inflation number in the calculus, you still came in very low, like at around 0.3%. The expectation was 0.5%. There's a big difference in those numbers. 0.3% for a 2-month inflation number times 6 is 1.8% inflation. Even with shelter, you're around 2%. But a 0.5% number is 3% inflation. So there's a massive difference in those numbers, obviously annualized over a 12-month period. Now, Japan today says, quote, we have a free hand to take bold action on the yen. Now, I don't know exactly what this is going to mean or what could come of this, but the yen continues to strengthen, and that continues to put pressure on the yen carry trade, which is a bigger issue in crypto, okay? This is one thing that is weighing crypto down, like, again, Bitcoin. The reason why Bitcoin's still $89,000 partially is the yen carry trade. What firms do is they borrow in Japanese yen, okay, and go out and buy assets with that. Now, it happens with stocks, okay? But there's a lot of concentration here in crypto, it appears. So basically, as the yen strengthens, as it looks like the yen is going to be, or the Bank of Japan is going to be raising interest rates, you no longer have as much free money. It's kind of like your margin requirements go up if you're someone that uses margin. Instead of having a 25% margin requirement if you're buying Apple, now you might have a 50% margin requirement like you're buying some mid-cap stock out there, okay? If the situation gets worse and worse, it's almost like manufactured margin calls are happening more so in the crypto market than in the stock market, but there still is an effect for stocks. Wells Fargo says they see nearly 50% upside for Oracle. Wells Fargo says recent AI-related pessimism has left Oracle undervalued and reiterates its overweight rating. The bank's $280 price target implies 46% upside after the stock fell 42% from its September peak. Analyst Michael Turin says investors are overly focused on risks tied to AI and OpenAI exposure, while positives are underpriced. Improving sentiment around Oracle's TikTok US deal and AI growth potential supports the bullish view. Now, the CNN Fear and Greed Index, following the market's move higher today, is sitting at 55, right on the border of neutral and greed. So you're about to break into the greed category. This is actually a big jump from Friday's close where you were at 45. So this is a 10-point move in one day. Now, market momentum is neutral. Stock price strength is greed. Stock price breadth is fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand, extreme greed. And junk bond demand in extreme greed as well. Now, the latest AI investor sentiment survey came out last Thursday and showed people are kind of just set in their ways right now. Bullish investors sitting at 44.1%, not much of a change in the past 3 weeks or so. Neutral investors at 22.7%, down about 2%, and bearish investors up about 2% as well, from 30.6% to 33.2%. So this is actually a very healthy reading for the AI investor sentiment survey. The percent of stocks trading above their 50-day moving average coming in today at about 58%. You're up today about 2% of stocks breaking above their 50-day moving average, and in a pretty normal level. Like, markets are not overextended here. They're not in the dumps. Kind of room to go either way at this point. Now, in terms of what the markets are pricing in for the first Fed rate cut, still not pricing in a cut for January, but for March, it's a fight here, okay? There's a 44.8% chance of a pause and a 45.7% chance of a cut. So technically, markets are pricing in the first Fed rate cut in March. And then April, the probability gets a lot higher. If we do get a cut in March, the markets are saying we're going to get a pause in April. And again, if we get a cut in March, we're going to have a pause in June. But if we get a cut in March, we're going to have another cut July. And then we're going to have a pause in September. Then we're going to have a pause in October. And then we're going to have, another pause? Is that what I'm looking at here? Another pause? Yeah, these probabilities are all messed up, actually. There's a higher probability that rates are between 3 and 3.25% by October than they are the same. They are 3 to 3.25% by December. So we really want to watch the longer end here, really from June, July, September, when we do get new economic data, to see what the markets start to price in for Fed rate cuts. Today, we did not really get any economic data. We did get the Chicago Fed National Activity Index. We can go ahead and refresh that. And, it came in negative 0.21, better than the forecasted negative 0.4, but that's not really a catalyst to move markets. Tomorrow we do get durable goods orders month over month for October. That's pretty delayed at this point. I don't think the markets are going to care about this too much, but you are expecting negative 1.5%. And GDP growth rate quarter over quarter, second estimate for Q3, coming out tomorrow morning as well, expecting 3.2%, which the first estimate we had was 3.8%. So with that said, ladies and gentlemen, let me know your thoughts on all of this down below in the comment section. Are you Team Santa Claus rally, or are you, Team Grinch this year? Do you think stocks are going to struggle in the early part of 2026, or do you think we could have a rally here on our hands? Hit that like button as well as subscribe to the channel if you guys have not done so already. If you guys want to come trade and invest alongside us, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.